Good morning, everybody. Welcome to today's Market Brief. Today, we're going to take a look at what are we doing towards the end of the year as the S&P has eclipsed the has eclipsed some key resistance points. We're sitting right at the high of the year, retesting our July 27th highs. We are just about there, back to retesting that 4607. And the question we're going to talk about today is, what's the difference between S&P, the index, and the S&P futures? Because as I'm looking at this SPX, we can see that we've got, the last two candlesticks are both green. We're basing here just before breaking out of this high. And so the natural inclination is to say, well, we've got some lower wicks on our last two candles, and the next move should be going a bit higher. But I'm going to switch from the SPX over to the S&P futures chart. And when I switch to the S&P futures chart, same index, just a one slightly different difference is that now we're looking at the futures instead of the index itself. Now, the futures market is an independently traded vehicle that should essentially mirror the S&P. But what do we notice about our last two candlesticks? Well, yesterday we had a very large red candle. And so far this morning, as of the recording right now, it's 5:46 in the morning Central Time, we have another red candle. And so two down candlesticks in a row on the S&P futures market. So SPX, the last two candles were green. The ES, the last two candles are red. And more importantly, those last two candles that are red is that we are sitting right at yesterday's low as we speak right now. Well, what are the differences? Well, the difference is that the S&P futures market is traded 24 hours, which means that this red candle started with the open on Sunday evening. So Sunday night's opening, when we opened up on Sunday evening, we opened up right here. So this red candle right here was our first candle of Sunday night, and you can see that the market really just sold off very precipitously yesterday. Up until just after the open. We had a little rally after the open and then wound up closing the day yesterday a little bit off the lows. But since then, we've pretty much traded down the whole evening. So this is certainly a much more bearish picture on an hourly chart than we have of the SPX. Now, if I look at the SPX on an hourly chart, we see this big gap from Friday to Monday. But if we just look at this gap from Friday to Monday, what we'll see is that yesterday it looks like it was a pretty bullish day because we opened the day here and we closed the day up here. It looks like we went up on the day if we only account for the daily trading session. And so by not accounting for the rest of the time, which by the way is important because the rest of the world's markets are open, you miss out on the fact that today is likely to be a day where we see the market continue a bit more of a pullback. So keep that in mind as you're looking at tradable opportunities today. That's not a bad thing, by the way, right? When I look at tradable opportunities, that's going to lead me to looking for trades that have a chance at a long entry if the S&P pulls back a little more. I don't know that we'll pull back very far in the S&P, but stocks like, I'll give you an example, Micron, which is pulling back into a fairly quality area of demand, may be something to pay attention to today as one of those positions that has a chance to find some decent support, right? Another one would be Apple. We've got a breakout area up above us, but we certainly have a nice little area of demand where you could find a good buying opportunity a little bit lower. So, as we are heading into the month of December, typically December, the first week of December is usually a little bit down, and then historically the rest of the month trades to the upside. This is the time to start looking for stocks that are giving you that bull pullback setup. And so stocks like Micron, stocks like Apple, stocks like Microsoft are all examples of stocks that are giving us that bull pullback maneuver. And when we're talking about the bull pullback, we're talking specifically about stocks that have risen and then pulled back a bit, and then utilizing that pullback as an opportunity to decide that it may be an opportunity to be a buyer somewhere down in a region like this to take advantage of the next move higher coming up out of that level, right? And if we look at good trending stocks, we will see that oftentimes stocks will do that, right? They'll give you a move up and a bit of a pullback before then trading higher. And that's a very, very common pattern when it comes to the pricing in any particular market, right? Here's an example of an IBM stock that has gone straight up that is not giving us that same pullback area, that same pullback opportunity, which is why I'm looking at a stock like Micron right now for a potential trade. But how do we identify this? We identify it by looking at the futures market and seeing that our futures market has already started to pull back before the index itself. So hopefully this little tip helps you in your trading and your ideas. If you have any questions, send us an email, support@tradersarmy.com. Until next time, everybody, I'll talk to you soon. See ya.